Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. On Friday, in half an hour's time, Rupee moved from 88.60 to 89 and a half kind of a level, surprised everyone as most of the market participants were not expecting Rupee to get weaker. Whenever an asset class moves, it moves because of two reasons. Broadly speaking, the first reason can be a fundamental reason, and the second reason can be demand supply mismatch. In today's presentation, let us understand whether the move was because of any fundamental news or fundamental reason, or it was just because of demand and supply mismatch. Now, if you see the table, from the table, it is clearly visible that on that particular day, between Thursday and Friday closing, dollar index was trading on a flat note. Other currencies like Chinese currency got stronger. Russian ruble also got stronger. Then there is a question in all market participants' mind: then why did rupee got weaker on Friday? On Friday, on the second half of the day, private bank was on the bid side, supply side was squeezed, and RBI, which was giving supply to the market near 88.60 to 88 level, was seen missing on that particular day, result in 88, 80 and 89 getting broken very fastly. As soon as 89 levels broke, short squeeze happened and stop losses of traders got hit. As a result, the entire momentum became very fast and furious, and rupee moved from 89 to 89 and a half kind of levels. Now the question is, what is the outlook for dollar rupee pair for coming days? There can be two possibilities. On Monday morning, RBI intervened strongly via selling in NDF market or selling via forwards. The move has to be so strong that the rupee closes below 88.80 kind of a level. If rupee is not closing below 88.80 kind of a level, then importers will continue to buy on dips and exporters might result not selling dollars above 89 levels. If this happens, then there will be a pressure on the dollar rupee pair and rupee might moves higher towards 90 kind of levels. The second possibility can be a consolidation into a new range of 88, 80 to 90, 20, 90.20 kind of a level. Historically, whenever rupee has broken a range, it tried to move in a range. For example, earlier the range was between 81 to 83 and 83 to 85. Probably this time it can again start consolidating between 88, 80 to 90.20 kind of levels. A closing below 88.80 can be an indication of a trend reversal. Otherwise, we can assume that the pair will move into a consolidation phase where 88.80 will become a strong support for the pair and 90.20 will become a strong resistance for the pair. Now let us discuss strategy for exporters. As the market and most participants in the market were expecting stronger rupee, so there is a high possibility that most of the exporters must have hedged their receivables between 88.60 to 88.80 kind of level. But historically, we have seen that whenever the rupee momentum has because of demand supply mismatch or domestical news, it tends to revert to its mean level. So in this case, we will suggest exporter the following strategy. Any level between 89.40 to 90.10 kind of a level, exporter should ensure that they take opportunity and increase their hedge ratio. If anyone wants to wait, they should keep a strict stop loss of 88.80. Any move below 88.80 will indicate the trend has changed. Now let us discuss strategy for importers. As global market currently appears to be on a calmer side, we will suggest importers that they should not panic at this point of time. They should keep a stop loss of 89.80 and wait for a lower levels of 88.80 to 89.10 kind of levels to cover their near-term imports.